Hi guys, it's your favourite YouTuber again, Danny Salari, and you're watching DS Learn Finance. Whoa, whoa, whoa. I'm back. Did you guys watch last week's video? I know guys. It was good. Real good, wasn't it? I just exceed myself every time. So if you guys watch it, you'll know that this week's video is a continuation from last week's video about how to sieve through 1,000+ stocks. Before we start, I strongly suggest for those of you that haven't seen last week's video to pause this one and go back to last week's video, watch it, and then come back to this one. Okay, you have to come back. And yeah, it will all make sense that way. I've left the link here for you guys to click on it. See, I'm even making life easy for you. Number 5 is profits. Your filter needs to be efficient at sieving through all those rubbish stocks to find the profitable stocks. And what better way to know if a stock is profitable by actually looking at its profits? It's in the word. See what I did there? But also, it's not just looking at its profits by itself, it's looking at its profits with relation to the market cap. And by this, I mean, imagine you are Bill Gates or Richard Branson. Yeah, you have more money than you know what to do with it, okay? We're talking billions of pounds, dollars, euros, money, basically, yeah? Tons of money. And say you wanted to invest in a particular stock. So you wanted to buy all of the stock available at that current share price. That's basically the market capitalization. So you have enough money to buy all the investors out, buy all of the shares available in the stock market for that one particular stock. What you want to know is the ratio between that number and the profits that stock has made the previous year. And that number tells you a good indication of how profitable that stock is. As a rule of thumb, I like to stick to something that's not less than 5%. So if the profits is less than 5%, then I'm not investing, because it's just not worth me investing my money in. But if the profits are 5%, and even better if they're better than 5%, that definitely attracts me to the stock. So for example, if all of the stocks combined, the total market capitalization was £1 billion, I'm not investing if they made a profit less than 50 million last year. Yeah, I'm not. But if they've made a profit of 50 million, or even better, say they made a profit of like 100 million, then yeah, that's definitely intrigued me more about that particular stock. Now 6 is the share price movement. What has the share price been doing for that particular stock over time, basically? And this one is a biggie, but with caution, I'll say, because ultimately it dictates whether you make money in the stock market or not. Now, to look at the share price, you have various time axes. You have daily time axes, monthly, quarterly, half a year, you have a whole year, you have 5 years, and then you have 10 years. But me, I like to focus on the 1 month, yearly, and the 5-year sort of time axes in particular. I do look at them all, don't get that twisted, but those are the 3 that I really like to focus on. And that's because it gives me a good short-term, medium-term, and long-term projection of that stock. But tread with caution, because yes, it's a great thing that the share price is going up for a particular stock, but that doesn't necessarily mean that the stock is doing well. Quite often, the stocks that are going up in share price, they're literally running on steam to keep things going. Instead, what the share price actually shows you is investors, so people, their reaction to that company. It doesn't necessarily show you what that company is doing, if you understand what I'm trying to say. I'm not going to actually do a video about this, guys, but yeah, watch out for it. Just keep watching, you know it's coming. Number 7 is the market that stock is in. Now, you can set this to one particular market. Well, I haven't found a filter that could set multiple markets. It would be great to find a filter. Maybe that's my next filter that can do that. But so far, the ones that I've used, they only allow you to pick one particular market. But you can tick a checkbox so that when all the stocks pop up, you can see what markets they're in. You want to spread your baskets out wide and diversify yourself. Now, I've done a video on diversifying yourself. Check it out here. And in my video, I mean that you need to literally spread your eggs out wide, because you don't just want to particularly invest in just one market, because if that market does bad for a particular time period, then you're screwed, because all of your money is in that one market. Whereas if you have your market in other things spread out across the border, then that way you can have some stocks, some investments that buffer the ones that aren't doing as well. It really is a good form of risk management. And number 8 is the dividend yield, guys. Dividend is basically free money that investors get from companies saying, hey, thank you for investing in us, basically. And the dividend yield is a ratio of the dividend amount that you get divided by the share price. So the higher the dividend yield, the better it is for you, because it means more free money, basically. A very good indicator that a stock is doing well is when the dividend yield has increased year after year. Now, I like to set myself a 5-year time frame. A lot of people set smaller time frames, but I'm not really convinced with that, because there are a lot of stocks that have dividend yields increasing for 3 years. Well, relatively, there's quite a few around that do that, and then we'll have a drop the 4th year. But I can literally say there's 1 or 2 stocks that I've seen that have only done an increase in dividend yield for 5 years, 5 consecutive years. So it's a really good indication of how healthy the stock is financially. So if a stock has a dividend yield increase in 5 years, you can be confident to say that, yeah, I might have to delve in deep here. I might have to do some proper research, some in-depth research now about this particular stock. But like I've mentioned, I've only seen 1 or 2 stocks like this, and I've sieved through thousands of companies, thousands. So that's why I call it a bonus filter, because it isn't necessarily something you're going to frequently find, but when you do find it, therefore appreciate it. Now that I've told you all of the filters that I set between the duds and the buds, yeah, it is time to sieve through meticulously with a fine comb, yeah, between that short list of companies now, and then really look at the financial documents and pick obviously the top 1 or 2 at the very max. And then once you get to that stage where you've got 2 stocks that you're confident financially, they're about, you know what I mean, like they're doing bits in the stock market, you know that you can now then dive in deep and really understand the fundamentals of that particular stock. Yeah, great. That means more reading, hey? Yeah, I love reading about companies, 100 to 200 page documents that fun. Fun. But what I'll tell you though is that things will get easier once you get in the habit of actually doing it. So once you've read through all of those documents, those long documents, yeah, you'll start to pick up certain habits. You'll start to understand what to look for in particular. And eventually, for me, it's come to a stage where, yes, I invested in my first stock a month and a half ago, but now I'm onto a short list now, and I'm onto another group of stocks that I'm interested in. And now I've managed to filter it down to like 5-6 stocks, and I'm gonna find 1 out of those 6 that I'm gonna invest in. So yeah, if I can do it, you guys can defo do it too. By the way, keep watching my videos to find out which stock I actually end up getting. Mystery. It's Dami Solari, your favorite YouTuber. You guys know I deliver that consistent content. I talk about stock market investments, I talk about portfolio investments, and I definitely talk about financial management too. Before you can leave, before you can go about doing whatever you're gonna do for the rest of the day, yeah, say it with me: like, subscribe, and share. BS Learning Finance. Whoa, whoa, whoa. Bye.